I
market
think
cap.
Bitcoin's going to hit a numerically interesting number. Now, obviously, I've put $1 million Bitcoin out there. I hope it hits $1 million, but maybe it's like 666,000 or 500,000 or 250,000 or some round number that the human mind is significant for some arbitrary reason.
Yeah,
we're going to hit that level, and then we're going to expect insane things out of the pace of fiat money creation. And at that point, it's probably time to sell everything. Now, I don't know where everything else is going to be. Solana, ETH, random fucking shitcoin in your portfolio.
Forget everything you think you know about Bitcoin, because the boldest prediction yet is about to change the game. What if Bitcoin is set to surpass its all-time highs even before the Fed makes its next move? It may sound unbelievable, but Bitcoin's rise has always been driven just as much by psychology as by economic factors. Traders are drawn to round numbers not because they hold any inherent value, but because they feel significant. We're talking about milestone figures like 666,000 or 500,000 psychological markers that act like magnets, pulling the market into a frenzy. Arthur Hayes, former CEO of BitMEX, believes Bitcoin is on track to hit one of these crucial price points, and it might just coincide with a weakening US dollar strained under excessive monetary policies. When fiat currencies finally face their moment of reckoning, Bitcoin's surge will look like just the beginning. However, this moment also serves as the ultimate exit signal. As liquidity recedes, everything from altcoins to speculative assets could be caught in the downturn. The real challenge for investors now is recognizing the right moment to exit before the frenzy spirals out of control. With the latest shifts in the crypto space, Bitcoin might just outpace the Fed. But if you're not careful, you could end up holding the bag when the music stops. Stay tuned, because the next financial shakeup won't just be about survival, it'll be about whether you saw it coming. Now, let's dive into clips from Arthur Hayes' explosive interview for deeper insights. Don't forget to like, subscribe, and turn on notifications for more in-depth updates. Thanks for joining us, and enjoy the video.
So I think that the 4-year Bitcoin halving cycle and sort of the minor profitability and how that swings over time made a lot more sense in terms of a market cycle when Bitcoin was a much smaller asset class, and I guess in crypto in general, because if Bitcoin goes, everything else follows. But now that Bitcoin and crypto are a bona fide asset class, they're talked about in every major financial network in the world. Every central bank has an opinion on it, whether it's good or whether it's bad. You have the leader of the empire of the US talking about Bitcoin and policies, and everybody's responding with that sort of stuff. So now I think Bitcoin has transitioned from this sort of technological digital bear asset into the best smoke alarm for fiat liquidity that we have globally. Previously, that role was held by gold.
Yeah,
gold and Bitcoin have some different properties that make them react a little bit differently to things. And now I think we have a 24/7 market. Anyone with an internet connection can access it. And it's really just driven on fiat liquidity. So as I've broken it down in my essays before, I break down Bitcoin's price value as, on one hand, it's technology. On the other hand, it's fiat liquidity. And so in the beginning of Bitcoin, there's a lot more technological change as sort of the ecosystem was building, and sort of technological developments were much more rapid. These days, the amount of change that happens at Bitcoin core is quite small, and obviously it takes a long time for the community to coalesce around how they want to change things. So the technology piece is pretty standard. There's a number of wallets that are getting added to the network at some rate over time. It's not anything magical or crazy. And so you can kind of forget about the technology piece. It works. And so whatever. It's really about fiat liquidity. How many dollars, euros, yen, yuan are being created and destroyed? And that's going to make its way into what we think the price of Bitcoin should be right now and into the near future. And so that's why I focus entirely on liquidity. All I care about is fiat liquidity. And yes, the stock market and Bitcoin can move, in tandem or not in tandem because of these conditions, but stocks have other things that decide the value, specific companies, earnings multiples, all these other things, right? Bitcoin, we have none of that. As long as we believe it works, then it just comes down to how many fiat things are in the denominator, and then you just get to the price. So I think post the Trump victory, Bitcoin obviously had a stellar rise from 70 to 110,000. People expected all these great things. And I think a lot of this, we're going to have all this money printing and all these sorts of things are going to happen. And I think the pace of credit creation disappointed expectations. And that's why we had this pullback from 110,000 to we got to a low of like 76,000 last 2 weeks, whenever it was.
Yep.
And I just put out a tweet earlier today. I've been doing some analysis over the weekend and listening to various folks. I think, obviously the United States is the most important barometer of credit creation globally. Everyone else sort of reacts to what's happening in the US. Yep. And I think there's a seminal change in the tone of Powell at the last Fed board meeting where, prior to this, he was pretty antagonistic towards Trump. I'm staying, I'm independent, inflation, we're going to fight it. Don't fucking talk to me about interest rates. I'm gonna do my own thing, right? I'm here to solve inflation. Shut the fuck up, Trump. Like, I don't care about your policy goals. Then in this press conference, there's a complete change of tone. Number one, they are going to decrease the pace of quantitative tightening, meaning they're going to let less treasury securities roll off their balance sheet, which is a bit curious because number one, inflation is still above their target. So core PCE is the inflation targeting. I think it's a bullshit metric, but whatever. It's the one that they look at. It's above 2%. Stocks are at all-time highs. Maybe they're 4 or 5% off the all-time high, but still all-time highs. Unemployment, all-time lows. Real GDP growth, stellar in the United States. And the balance sheet is up over $3 trillion from COVID. And the whole point was, let's remove this credit from the system to stifle inflation to help the average American. And yet at this press conference, when the American economy is on, in all sort of ways you can look at it, doing very well, saying, I need to reduce the pace of removing the thing from the system that's caused all this harm to the average American. That's a bit strange. And then he went on to say, we think that possibly we could allow our mortgage-backed security runoff, which is about $35 billion a month, to be negated by buying $35 billion a month of treasuries in the near future, right? So that's, MBS, QT, U.S. Treasury quantitative easing, because you're effectively buying treasuries with printed money. That's very positive for dollar liquidity.
Bitcoin has emerged as the market's most responsive indicator of liquidity trends. The Federal Reserve's slowdown in quantitative tightening, QT, and shifting treasury strategies hint at an implicit easing stance, the perfect environment for crypto to thrive. As Arthur Hayes points out, Bitcoin's ability to withstand regulatory pressures highlights its increasing macroeconomic influence. With Fed Chair Jerome Powell downplaying inflation concerns and institutional adoption steadily rising, the current market setup closely mirrors previous liquidity-driven rallies. Technical indicators are now aligning with these macro signals, positioning Bitcoin for a potential breakout. Bitcoin doesn't wait for official policy changes, it prices them in ahead of time. Recent moves by the Fed, such as tapering QT and reallocating mortgage-backed securities, MBS, proceeds into treasury purchases, suggest ongoing liquidity support. This creates ideal conditions for Bitcoin's continued ascent. Market behavior further confirms Bitcoin's evolution into a pure liquidity asset, reacting less to regulation and more to macroeconomic flows. As Powell signals a softer stance on tariffs and institutional investors quietly accumulate Bitcoin, all signs point to sustained crypto strength. According to Arthur Hayes, Bitcoin now serves as the most accurate gauge of real financial conditions, often moving well before official announcements. Now, let's check out more highlights from the interview.
In the future, we haven't decided when yet. He was teasing this, telling the market what they plan to do, almost like a trial balloon to see what the reaction would be. Hey guys, we might taper QT to be flat, so the Fed's balance sheet will be stagnant, but we'll, on one hand, we'll be allowing $35 billion of mortgage-backed securities to roll off our balance sheet. But instead of that $35 billion just reducing the size of our balance sheet, we're going to take that money and we're going to go in the treasury market and buy treasuries and keep the yields low to help Trump, which is very stimulative for financial conditions globally.
Totally missed that.
He did say this is definitely going to happen, but when the Fed teases something, usually it's going to happen in the near future. They teased QT being reduced, I think, in the December meeting. When you looked at the minutes, there was like, hey, there was votes or governors saying, hey, we think that the pace of QT should be tapered sometime in this year. And you had the big banks arguing for it in the latest quarterly refunding announcement, saying, we believe that QT should be ended, quantitative easing should begin. And now you have Powell saying, hey, we want to help the treasury market, but we're still not going to be, we still can't call it QE because that's bad publicity. It's still balance sheet constant, but it's kind of a QT twist. On one hand, we'll allow MBS to go down, but on the other hand, we'll buy some treasuries. So he said that. And then finally on this tariff piece, because everyone is just freaking out about tariffs. What's Trump going to do on tariffs? Is it going to be reciprocal tariffs or a 20% tariff on everyone? He said, we believe that the inflationary aspects of tariffs are transitory, which basically means, let's say that Trump goes full retard, 50% tariffs or some ridiculous number, and that causes domestic inflation in the US as prices rise. Powell says, no, that's not inflation. We can still continue to ease conditions because we believe that is a transitory effect. That is not a long-lasting measure of inflation, and therefore we are within our mandate to continue to ease monetary conditions. So tariffs don't matter anymore to Powell, and they shouldn't matter anymore as crypto investors. If Trump does 50% or he does 2%, it doesn't fucking matter because we know that Powell's going to continue to provide the monetary conditions, the easy monetary conditions that we need to have our portfolios go up in value in fiat dollar terms. So those three things, as I sort of thought about it and listened to some other commentators, made me extremely bullish on the new trajectory of crypto. And I think that on balance, we probably hit a bottom of 76,000. Does that mean that we're not going to retest it? No, of course not. But if I had to make a bet, I would bet that we go higher rather than lower. Even the US Bitcoin Strategic Reserve, what is it? I have confiscated some Bitcoin from people and I'm not going to sell it. That's what it is. And it's a lot of Bitcoin, don't get me wrong, but that is what it is. It is not, I'm going to print money and buy Bitcoin, which is what everyone wants to happen. I don't think that's politically palatable in the United States. It's not politically palatable in any country, to be honest. I think a central bank, if they're going to buy an asset, they're going to buy gold because they intrinsically understand what gold is. As recent as 1971, it was the standard globally. The dollar was on a gold standard for other central banks. And so that's what they're going to buy. And they have been buying it in mass since 2008. They've accelerated since February 2022 when the US and EU stole Russia's money. And so that is what central bankers are buying. They're not buying Bitcoin. There is no fucking way that a politician is going to stand up and say, I'm going to print money and I'm going to buy Bitcoin. That is not happening. So I think people need to adjust their expectations on what these strategic reserves mean. It's kind of like when a boring company starts throwing out buzzwords of all these product lines are going to need to get their stock price to pop. Companies want to be seen to be technologically forward, to be innovating, and so they're going to say these nice things. Oh, we're going to put a Bitcoin strategic, or we're evaluating, or we're this, or we're that. But are they going to go to their people and say, I'm going to print money, I'm going to increase the fiat supply so we can buy some Bitcoin, so the Bitcoin bro can go to Space Club in Miami and buy tables? Like, it's just not happening. So I think people need to get their expectations right. No, I think it's people in crypto don't understand how politics works. So, there's a political process and how people do things in the United States, whether you like it or you don't, and they're following in that process. There'll be bills, there'll be lobbyists, there'll be consultations, there'll be working groups and this and that, and the luminaries or whoever those people are will get to meet the people in charge and talk to them about what they want, and they'll come up with this massive fucking bill. And maybe it'll be good, maybe it'll be bad, I don't know. And that'll be the state of the play, right? It's going to be some massive step change where they're just going to make you rich just because I don't know why. No. And I think that's just people don't understand how politics works and they have these sort of inflated expectations about what's going to happen. So the intent is we want to have a more Bitcoin or crypto positive policy. The execution, the details are obviously very important because what's in your portfolio depends on the details, not the intent. People got the intent, it went from 70 to 110,000, and they kept thinking what the intent was the policy. And they were rudely awakened that the intent is not the policy. Policy is still being written. And it might not be as bullish for whatever you own in your portfolio as the intent of what someone said on the political speaking circuit was. It's not that they're lying to you. It's, I would like to do this. Okay, but the reality is they have to make concessions here and there and everywhere. Crypto regulation doesn't matter, in my opinion. If it mattered, then Bitcoin would be at $2 or whatever. If the Democratic people's assault on Bitcoin or in the Biden administration, if you sort of believe that rhetoric, then Bitcoin should be much lower. Is it? No, because they printed a fuck ton of money and it went higher. So regulation doesn't matter. If Bitcoin trades on TradFi regulations, I don't want to own it. I want something that is immune to regulations, that it doesn't matter what the politicians do. The Satoshi has created such a perfect game of economic incentives that we will survive regardless. Yep. If you don't believe that, then sell everything in your portfolio, because what are you doing? Just go buy a fucking stock.
The crypto market may be underestimating just how quickly Bitcoin could reclaim and surpass its previous all-time highs. Some analysts are now projecting a potential surge to $123,000 by June. This aligns with Arthur Hayes' long-held belief that Bitcoin thrives in environments where liquidity is expanding, a scenario currently unfolding before our eyes. As Real Vision analyst Jaime Coots highlights, Bitcoin's trajectory remains largely unaffected by short-term regulatory noise or tariff debates. Instead, its movement aligns with macro liquidity indicators, such as the weakening US dollar and increasingly accommodative financial conditions. The recent liquidity injections by China's central bank, combined with the Fed's implicit dovish stances lowering QT while shifting MBS investments into Treasury, set the stage for Bitcoin's next upward leg. Bitcoin has now positioned itself as the ultimate gauge of global liquidity, and recent market behavior reinforces this status. While short-term volatility, driven by concerns like trade tariffs and recession risks, may create fluctuations, Bitcoin's underlying strength suggests institutional investors are accumulating in anticipation of further monetary easing. BlackRock's head of digital assets, Robbie Mitchnick, supports this view, suggesting that Bitcoin could perform well in a recessionary climate, serving as a hedge against policy shifts. However, not all indicators are bullish. CryptoQuant's Bull Score Index is at its lowest level since early 2023, hinting at potential near-term consolidation before the next breakout. But if history serves as a guide, Bitcoin often front-runs major liquidity shifts, meaning new highs could arrive before an official Fed policy pivot. With multiple states exploring Bitcoin reserves and regulatory pressure easing, the structural backdrop for crypto continues to improve. As Arthur Hayes often says, when liquidity flows, Bitcoin follows. The real question is, does the market fully grasp how soon this next wave could hit? As we wrap up, Bitcoin has become the ultimate liquidity indicator. Do you think it will break its all-time highs soon, especially considering the Fed's possible policy shift? Let us know your thoughts in the comments below. Share this video, hit the like button, and don't forget to subscribe for more updates. Thanks for watching.